Video is looking at an example of payroll with a company called Trivantus. So the problem here that initiated this study is missing tax payments, but we didn't know that at the beginning. So if you look at the gross wages here, this is from the journal. You see it's 63. The employer taxes are 49.13. But after allocating the employer taxes, the gross wages in QuickBooks Online are only 49 instead of 63. It's a variance of 13,000, almost 14, which is no bueno. Here's the P&L as it should be. The 63, 258, 63, 257.90, close enough. I see the variance there. It's a little different. And we have some fees here, and the employer taxes are correct. So let's see how we got there. First step was to export the wages register from QBO. Let's take a look at this spreadsheet. So this is the export right here, and these are just all in one column. So these are all the net paychecks that hit the bank account. They total 54,359.85. Okay, which is exactly what we see on the report. Or actually before fees. So the journal shows the 53,831. So we know the difference must be fees, because this is what's being taken out. It's less than what the journal shows, or it's more. So the difference must be fees. So we book that difference to fees. Now we get our gross wages on the report to compare, and we see this variance. And of course, our difference with the fees there. But that difference is the total taxes due. Okay, so once we take care of the fees, the difference is the total taxes. So the conclusion there, let's walk through this. The net wages total we talked about for the journal, the difference we put to fees, the total taxes for the journal, and that's exactly our variance now after the fees. So the conclusion is the net wages and the payroll fees are the only expenses from checking that are showing in checking. And the difference is equal to the total employee and employer payroll tax liability. And we don't see any separate payments from the business accounts for tax payments. So that's what we're missing from the books. We'd expect to see those payments coming out. And that's why we have that difference. So this is a good way for a good starting point for problem solving is exporting your net paychecks, comparing that to the journal. That'll allow you to identify fees included if they're not taking those out separately. And a lot of times you won't see those on the report. And then you can see what your difference in the books, gross wages, compared to your journal, and see if the taxes are indeed being paid out or not. Because sometimes we don't know if the payroll company is paying the taxes or if the business is paying them themselves. And this helps us to identify that.